Hello everyone and welcome to a new ATFX video. My name is Gonzalo Canete and I'm here to share with you a quick view and review on one group of companies that are the biggest ones, and actually they are the leaders on the US market. I'm talking about Amazon, Google and Apple. Tech sector, the sector that is doing the best performance for the last couple of years. So we're gonna take a look on fundamentals. We're gonna also check what is the main sources of the incomes they got it, which plans they got in advance, what is the main sector challenge they got. Also we're gonna analyze the results, the annual results, net income, revenues, earnings per share, and so on. And we're gonna finish analyzing the charts of each one of them. We're gonna take a look of a long-term chart, short-term chart on Amazon, Google and Apple. And just as a reminder, if you take a look on previous videos, you will find also these fundamental technical analysis reports done in previous companies. And I have to say we have been really precise and really effective, giving good targets, good goals on the prices and so on. Just let me remind you one more time that this is not advice of any kind. I'm just here with you to share my view on the stocks. Let me share the full screen so you're gonna see all in detail. Let's start with a brief story of everyone. Which one is the oldest one? Well, the oldest one is Apple. It was founded in 1976 by Steve Jobs and Steve Wozniak. Second one in that list, it was Amazon, founded in 1994 by Jeff Bezos. And Google was founded in 1998 by Larry Page and Sergey Brin. If we take a look of main source of income, just to understand what is the main business of these companies, we need to take a look and analyze how exactly these companies are making money if we really want to understand how they're gonna develop or what's the performance we could expect from them if we really know what is the source of the main incomes for these companies. So again, full screen. Main source of income, obviously iPhones, service, Apple Card, Apple News, Apple Arcade, Apple TV Plus, which is something that is shared with another companies. For example, Amazon and Apple, they are competitors in these terms. They both of them try to reach part of the market in terms of streaming platforms. You got Prime Video, Apple TV. Latest projects: expansion in services segment. No4, first successful personal computer company, popularized of graphical user interface. Actually, it's the second biggest phone producer in the world. Apple is the second biggest. I think the first one is Samsung, second one is Apple. Financials. Last year, 2022, last year, no, we are in 2024, so 2 years ago. The end of 2022 was a net income of 99.8 billions and a revenue of 394.3 billions. So as you can see, there is a big gap between the revenues they doing and the net income they generate at the end of the year. The question is, do you think Apple has been doing better or worse since 2022? We got the result for 2023, so that's the ones we're gonna analyze now. Let's take a look and see. Well, I have to say that it's little bit slower compared with the previous one. On 2023 September, the ending results by the end of the cycle, by the end of the fiscal year, it was 96.95 billions. That's lower compared with the 99.8 done in 2022. So in that terms, we will say that the net income generated by Apple has decreased slightly since then. Let's take a look on Amazon, because we need to go quick if we want to make in 10 minutes also the charts and perspectives and targets in terms of price. So Amazon, what is the deal with Amazon? Main source of income is e-commerce, as you probably know already. Amazon Web Services, you know, they renting servers for many different, even for institutionals, for retails, you can rent the servers, the cloud servers from Amazon, a part of the biggest shop, online shop on e-commerce business. Latest projects: leader in generative AI with Bedrock, Prime Video and Streaming Wars. As I say, it's part of this battle between Netflix, between Apple TV, Prime Video and so on. No4, largest e-commerce platform, cloud computing gigant, is exactly what we say. They renting services, servers, and they also are the biggest online shop in the world. Financials. This year, 2023, the annual revenue has been 554.03 billions. Earnings per share $2. Comparing with the previous years, is good or bad? I just took the projection of the income. Let me see what else. Yeah, it's here. You will be surprised by the drop caused in December 2022. As you can see, this is the net income generated, and the net income generated on 2021, it was 33.64 billions. Taking consideration for a second that during the pandemic period, during the lockdowns, Amazon was actually rising a lot on market. It was hiring, I remember, if I'm not wrong, like 25,000 new employees. It was expanding actually the business, obviously because the lockdown was not facilitating the local businesses, and instead all online business was rising, and particularly this one, which is the biggest online shop in the world, was receiving that as a kind of advance. Now, what happens in 2022? Let's take a look closer and see what exactly caused the drop on the net income of this company by them. Amazon net income saw a sharp decline in 2022. The company report a 2,722 billions of losses compared to the previous year, 2021, when the company net income was 33.364 billions. When the company net, it was 2.7 billions, not 2,000, sorry. 2.7 billions of losses in 2022, compared with the previous year, 2021, the one we mentioned a minute ago, where the company did 33.36 billions. This represents a sharp reduction of 108.16% on net incomes, suggesting a significant decline in profitability. Amazon's 2022 net income decline is a stark contrast to its previous year's performance, during which it had demonstrated robust net income growth, as evidenced by the 56.41 increase from 20 to 21. Now, what was the cause of these losses? Investment losses. Amazon faced a substantial pre-tax valuation loss of 12.7 billions on its investment in Rivian, an electric vehicle company. This market notable reversal from the previous year, when Amazon saw a valuation gain of 11.8 billions from the same investment. The expectation, as you can see, it was 11.8 billions of profit buying this company, Rivian, and actually by the end of the year it was 12.7 billions on losses. So it was completely the opposite effect that they were looking for. Increasing operating expenses. Amazon operating income nearly reached 12 billions in 2022. This decline was primarily attributed to increased operating costs, including wage growth and other expenses. As a result, the operating profit margin dropped from 5% in 2021 to 2% in 2022. Decreased sales growth. Also, the sales was dropping. The year-over-year net sales growth rate for Amazon slowed down 9% in 2022 compared with 22% of the previous year. This deceleration in sales growth, combined with the rise in expenses, contribute to a net loss for the company. And the last one, which is the economic and market conditions. Amazon, like other tech stocks, faced challenge due to the broader economic condition and market trends in 2022, which is when the market was dropping in general terms. It was a generic risk, not a particular risk for the company. So it was the intrinsic risk of the company, the problems the company was facing, plus also the market situation, market conditions dropping, caused by the massive inflation and the war of Russia invading Ukraine. So in summary, it was a bad year for Amazon, and that's why the net income was dropping on 2022. Well, literally disappeared. It's not even low. It was losses, not even incomes. Let's take a look on Google so we can keep moving forward and go to the charts. Main source of income: internet search, advertisements, apps, maps, Android, and YouTube. So basically, Google has been buying social networks like YouTube so video platforms like YouTube, but also is making one of the main sources of the income of Google is the management of the data. As you can see, they are everywhere. Even Android is based on it's an operative system based on Google, so it's tracing absolutely all the activities, and therefore it's super useful in terms of business. That's why advertising, which is marketing campaigns, lead generation, all these things are one of the key sources of incomes for the company, Google AdWords and so on. Data protection is one of the challenges they got it, especially in Europe, but that's the main one of the main cores of the business. Latest projects, venture in longevity research, Calico. We also got home products, Nest, and research lab, Google X. Nofo, dominant search engine, AI, and data collection. As I say, with Android, it's basically collecting absolutely everything. You make a few comments next to your friend, and Google, your Android, know what you're talking about, and the next advertisement when you open an app, it's going to be about that you just mentioned your friend, you're thinking about to buy or you need. And now, finally, financials. What's the numbers that they giving to us? Annual revenue for 2023 was 307.39 billions. Earnings per share, it was $5.21. Now, what is that in relation with the previous period, so the previous years? We're going to take a look. You can see what's a drop on 2022. Again, market conditions probably caused not that much the intrinsic situation of Google, but most likely the general conditions of the market, because it was dropping due to inflation. Remember, it was the top highest inflation in 40 years for some economies, West economies. So Google net income, well, we got on 2021 76 billions, on 2022 59.97 billions, and on 2023, well, we improving 73.79 billions, but it still is below the maximum net income generated by Google, which it was in 2021. Okay, now market share and competition, which are the main strengths of these companies. For Apple, 4th largest PC vendor, 2nd largest mobile phone manufacturer. Amazon, dominant in e-commerce and cloud computing, major player in AI. Google, leading search engineer, major player in online advertising and AI. Again, so as you can see, Google and Amazon are investing a lot on these artificial intelligence projects, generation of motors. But I think it's just a next step evolution on search engines. So this one is the next step where they're collecting data around the network and just develop a rational answer based on the information they can collect on Google results, for example, right? So so that's all. I think in terms of business, we can see clearly what's the main core of all of these companies. Now it's time to take a look on challenges, and we're gonna go finally to the charts, okay? So Apple, let's start with them. Antitrust challenge with Apple Store and unionization attempts by its retail workers. So syndicalist activities, so join workers just to demand different conditions, and well, mainly in the countries that what they produce, which is Asia. Amazon, balancing rapid expansion with profitability, competition in AI and streaming. The problem with Amazon is it's open different business line of business, and then they need to keep focus the diversification with enough strength on every single size of the business they are developing. Google, data privacy concerns, the ones I mentioned in Europe, data protection, GDPR, and all these new laws that protect the data from customers, and maintaining innovation. Google need to keep update in terms of innovation. Well, finally, it's the time that most of the audience of you expect, which is take a look on the charts and see the prices. Okay, this is so good. We see pluses, we see cons, but we want to see what the price is going to have, what the price is going to do on these stocks and what we can expect. Amazon, first of all, super long-term chart. Let me put full screen so you can see the levels clearly. Completely long-term chart since 2016. You can see the charts, and now I'm sharing with you this chart because if you take a look on short term, let me see on short term, you will see, oh, it's amazing. Amazon is doing super well. It's rising a lot. as you can see on the screen, take a look. Even with a gap, a bullish gap, rising to new maximum and records, and it's not what you think. Take a look on long term. Boom. So Amazon still need to break out the maximums generating. I just left the Apple logo there by mistake, bro. Okay, this is Amazon. So Amazon is still facing a massive big resistance, which is $178, $175 per share. Even above those levels could be something that eventually could get reached, like you can see on the chart. During the 2021, it was touching even levels above those ones, $180 per share, $185 per share. But still, the candles, monthly candle, were closing all of them in every single case below $178 per share, and therefore for Amazon, even with the good results, even with the move of the price rising, as you can see on the chart, to $172, getting close to $175. My friends, remember 178 is one important level for this company. So do not expect that this company just passed through 178 cleanly. You're probably gonna see a retracement on the price by that time, by the time the price reaches this. Even although considering that maybe having the price and having the movement on the price with that gap, that massive gap formed there, maybe there is an option, a possibility that the prices start to drop back in a pullback action, trying to find $170, $175 per share. Okay, so watch out, be careful with Amazon, because new change could come. Now Apple again is rising still since they open. They are dropping based on the charts taken today, which is 2nd of February. By the time you're watching this, probably is the next week. Pay attention, watch out, $200 per share, $198 per share, because again, that's a double top. So there is a high possibility that even if Apple is doing well and rising, once they reach $200, $198 per share, there is a possibility that again new sales appears in that area of price and start to short the price in that area. Okay, so pay attention. Otherwise, if you see the price dropping, it seems to be interesting or attractive by about $180 per share. It's a good level because, as you can see on the chart, in short term is a pivot point area. Is 50% of the whole range formed since last year, and therefore could be another option if you want to stay long in this company above those levels. If you see the company is dropping, we can see that again another support area is between $160 $155 per share. Seems to be quite a strong area, even $165 per share, and therefore maybe it's also an area where buys could come. Now we are taking a look on Google. This is Google, and this is the evolution of the chart. It's super nice. The only difference here is I'm sharing with you a short-term chart because I want to show you a good lesson in this case, right? I'm a swing trader. I always love to see from long-term to short-term. If you take a look to short-term, this chart, you will probably feel that the market, the action, the company is doing super well. It's even breaking new maximums. Okay, it's in this gap now, and it needs to keep pushing up, and it seems to be an uptrend, super clean and really nice. So it brings to you a lot of positive energy. Watch this chart. It seems to be the company is doing really well. What is this line? What is this line at $151? What is this line? Why I put that line there? There is nothing there, right? There is nothing relevant there because, as you can see on the chart, everything is clean and it's bullish, super bullish, this chart, right? My friends, this is the reason why we need to always start with a long-term chart. Boom. This is the same company. Even when you don't believe it, it's the same company. When you change to a monthly candles, you can see a massive double top that is probably source of new sales. Anytime we see the market getting close to $150, $151 per share. Okay, look the massive gap leaving after reach those levels. So that's why you need to take a look always first on long-term charts. Okay, I think that's all. I think with this we finish. We have seen Amazon, Google, and Apple. If you want to analyze another companies, even if you want to analyze another assets, or you want to just suggest me any other kind of topic for these videos, please contact me. You got the email on the screen. And also, don't forget that if you are not and you like this content, please give me a thumb up, subscribe to this channel, and enjoy. Bye bye.